Welcome back to the Broker Power Up podcast, the AIME podcast for strategy, stories, and insights to help you close more loans. I'm Tommy Golightly, joined by Haddad. How are you?
Here we go, my friend. I don't know, man.
Episode
I'm a
40,
fan. Oh my, we're almost at a full year's
big
worth of
4-0.
these.
Yeah.
Yes, we had Austin. Obviously, we were just
Mhm.
there. You and I, all Fuse is going to be off the charts next year.
I'm
Tommy,
excited.
myself, few others. I mean, we vetted out the venue. It is absolutely gorgeous. A lot of room for activities, to say the
So
least.
much room for
So
activity.
much room.
But we have a lot going on today. We have the Broker Buzz, where we will dive into the top posts of the Broker Power Brokers Our Best Facebook group and discuss what's trending, what's working, and what you need to know. Then we'll go into the sales pitch training, where John helps us become better salespeople. Then we will wrap things up with story time with John. But first, fortune cookie. And today's fortune is we got another brick.
You have no fortune today.
No fortune today. Moving on because I don't have any more on my desk. Unfortunate. Go watch a Broker Power Up short on our YouTube channel or on our Facebook feeds or Instagram. There's a bunch of them going up and a bunch of fortune cookies were open. So go enjoy those. You'll see 2 of those a week, starring some of the members that were at Fuse and lenders who came and hung out with me at the booth. It was a ton of fun. Thank you all for your time. So let's dive right into the Broker Buzz with our first question of the week. I have a borrower who is W-2, but on their 2023 and 2024 tax return, they showed a large business loss on Schedule C. That business ends in 2024. So my question is, how would the underwriter look at those 2 years of losses? And would they accept a letter from the borrower stating business is closed? Or would they need to wait for 2025 returns to show no losses? FICO requires going FHA.
I love the question here. And the reason why is you are doing your due diligence. So on conventional loans, you do not need to include losses. But on government loans, you do need to include losses. So thank you for sharing that. It is going to be FHA. In your case, though, you are in luck, my friend. So the business is no longer active. You actually need a letter from the CPA, and a letter of dissolvement is all you're going to need that says the business is not active. There is no money coming in and out of the business, and therefore the losses won't be attributed towards the client's income. And why is that? Well, it's gone. The business is gone. They can't take another loss coming into next year, the year after that. So you'll get a letter from the CPA. Letter of dissolvement is specifically what it's called, signed off by the CPA, and you are good, my friend, to proceed forward. So that's a good one. I love your due diligence. Way to be cautious, by the way, but you are good with this specific loan.
Absolutely. And our next question. Been in the business for a couple of years and want to try out webinars to get new leads. Would appreciate any advice on how to get people to come and structures for a successful webinar.
So, Tommy, I'm going to actually pass this one your way, my friend. This is your wheelhouse and your specialty. So, what are your thoughts and take on this with the background you have?
Yeah. So, if I'm understanding this correctly, it's you are looking to get new home buyers to come in and learn from you, and then turn into leads, and then buy a house through you. I would suggest honestly against webinars, and would suggest a way like setting up a QR code or some kind of paid ad that would push to set up a Calendly or some kind of way to schedule a video call one-on-one. I would not do group things expecting leads to come out of it. It is very hard to get people to show up to webinars. It has taken AIME a long time to figure out the right mix of things. We are there now. But you have to push it in the right way. You have to get it in front of the right people. And the home buyers that you're looking for in your area aren't just readily available right there in front of you unless you have a list. If you have a list of prospective buyers, that would be a different thing. If you have a large list that you're basically trying to have the same meeting for, that would be the correct time to use a webinar. But it just seems like I would suggest not a webinar, because you would need to put in a lot of work up front for potentially not many people showing up. And that one can be discouraging and you're trying to push a square peg in a round hole. It's not the right tool. So I would suggest setting up a way for people to find you and be interested in what you're trying to tell them, but through a one-on-one video, and just schedule it that way, opposed to one.
Thank you, sir. So I like the direction, especially being new to it. I would recommend exactly what he's saying, which is, hey, try to get the one-on-one consultations first, build the confidence, figure out what's going on. And then from there, you can build out that webinar piece. But you want to build the confidence up front. And if you get that one-on-one consultation, that excitement really starts to build up and you could take it from there and drive that momentum forward. So appreciate you taking that one on.
And if you do want to practice that long form, like say you have ideas for webinars, make a YouTube channel, put them into YouTube videos, and then refer people to that video so it's evergreen and you can push people to it, opposed to having people sign up, be at a place at a time to watch your thing, opposed to just being able to watch it whenever they need it or find it through YouTube and then putting your information in the description for reach out. Lots of ways to just have different fish hooks out there to get you new leads. If you do have any questions, feel free. I commented on your post in Brokers Are Best Facebook group. Feel free to shoot me a DM. Happy to talk and help you out in any way we can. And our last question for the week, need to create a presentation and want to use AI to help. I have a combo of Word docs, PDFs, and photos, and I have prepared to make the slide. Which AI platform would best handle this?
So AIME actually launched this at Fuse called the Architect, courtesy of Russell Petty. And this thing is dialed in, can create presentations for you in 53 different languages. It's connected to Alex Hermosi and all of the top marketing geniuses to build the content that you're looking for. It is really easy to use. It's inside of our portal. You do have to be a member, which you're talking about all these other different platforms for as little as $19.99 a month. Yes, I'm going to plug an AIME. Don't care, because we provide tremendous value for you to grow and scale your business. Check out the Architect. It does everything you're asking for. It is top of the line, and it's also taken in all of AIME's webinars, videos, trainings that we've done over the last 7 years, incorporated it into the mix and build out of it. We have top producers that have put together content for us. We have lenders that have put together content for us. We have hitters across the country that have put work into the content that AIME has constantly delivered back to the community. Check it out. You're going to love it. It'll put together a great presentation for you that makes sense. And it's correlated all towards mortgage as well, because that's what we taught it to do.
And if you're not a member, like we said, you can scan the QR code and become an AIME member. And on the other side of the ad, we'll be back with some sales pitch training. See you in a sec.
Are you a wholesale mortgage professional? Well, then the very first thing you need is a community to help you and your business grow. With AIME membership, your community is right here. Joining our community means never navigating the market alone or operating without a safety net ever again. We are 16,000 members strong of united wholesale professionals. From rookies to top-ranking originators, all dedicated to supporting each other's success so we can grow together. Beyond entry to the best community in the mortgage industry, AIME membership gives you the resources, tools, guidance, discounts, services, and support that help you and your wholesale business grow, thrive, and most importantly, close more loans. AIME membership connects you with leading wholesale lenders and vendors, offering you exclusive access, services, and discounts that save you more money while helping you make more money. Never get stuck on a loan again with our lender escalation program. Grow your network and skills with the wholesale industry's best conferences and networking events. Get the strategies and skills of top originators and industry innovators with AIME's cutting-edge wholesale mortgage education, resources, and content. AIME offers all of this and more, starting at a low price of $19.99 a month. You heard it here first, couple cups of Starbucks coffee. For you to learn more and get started, all you have to do is visit aimegroup.com AIME group.com/membership. Your community is waiting.
And I'm waiting to become a better salesperson. Today, what do we got, John?
Yes, sir. So today is all about the structured presentation. If you are a new LO, even a seasoned LO, and you're getting back into the refinance market because it is basically, there's opportunities everywhere. As you can see, refinances have grown tremendously year over year, and they're going to continue to grow, I believe, coming into 2026, 2027. So I want to give you a presentation structure when you're speaking to these clients on the phone. So if you are continuing to present on the phone, I like to do it, especially when it comes to refinances. It's just a personal preference of mine. There's going to be basically 5-6 steps that you take whenever it comes to a presentation. So I'm going to walk you through how that works. Number one, you want to take control of the phone call. So Mr. or Mrs. Client, can you please grab a pen and paper? Well, Jonathan, I can't do that right now. No worries. Can you take notes on your phone for me and put me on speaker? Great. Thank you so much. Let me know when you're ready. That's going to set the tone that this is basically a student-teacher relationship right now. Clients need to understand that when it comes to a presentation. Number two, you want to recap the goals that the client told you about on that initial phone call that you had. And if you're doing it all on one phone call, again, you're just recapping the goals. So Mr. or Mrs. Client, when we spoke earlier, you said the main goal for you was to save a little bit of extra cash monthly to make it just a little bit easier with all the rising cost happening in this world today. Is that correct? Okay, perfect. And if you can, tie in an emotional goal to that recap, as long as the client told you, right? Don't make it up. And the reason this is so important for you and your family is because you and your wife have had a minor setback when it comes to your income. Is that right? Yes. The third part of this is you want to build what's called a yes train. You want to get multiple yeses before you go into the actual presentation to start and create momentum. And realistically, this is you just simply telling the client what they were talking about on that initial call. So Mr. and Mrs. Client, the main goal was to save at minimum $140 a month. Is that correct? Yes. Mr. and Mrs. Client, another main goal of yours was to lower your interest rate, which would help provide you that additional savings. Is that correct? Yes. And the third piece of it is you want to put that extra money aside in order for you and your family to have a little bit of relief when it comes to your monthly payments. Is that correct? Yes. It is very important you build this yes train up and you're tying it back to the client's goals. Why is this important to the consumer? From there, step 4 is now I'm presenting the loan option to the client. And I'm old school with this, and I'm going to continue to be old school. Well, it works. All right, Mr. and Mrs. Client, with that pen or paper, draw me a T-chart. And if they didn't do a T-chart with the notes on your phone, put current loan. And then underneath that, put new loan. And let's start with current loan. So Mr. and Mrs. Client, go ahead and draw a T-chart for me. On the left-hand side, put current loan. On the right-hand side, put new loan. Now, with your current loan, Mr. and Mrs. Client, you currently have an interest rate of, your balance is, your payment is, this payment includes taxes and insurance, and I walk through the client's current loan. I want them to see everything from a comparative standpoint. Now, Mr. and Mrs. Client, on the other side where it says new loan, I want you to walk through my option with me. And another important piece here that I skipped over, and I apologize, is to make sure you let them know, hey, save your questions until the end. Let me get through everything first, and then I will answer all of your questions after. You don't want to be cut off as you're presenting, especially if it's a situation to where you might be nervous about the closing costs on the loan, or maybe you think that, hey, I don't know if the savings are going to be enough. You want to minimize the questions until the end. If you get cut off, you have lost control of the conversation. And unfortunately, it's an uphill battle from there. And you might be thinking, well, John, what if the client says, I have a question. Hey, Mr. and Mrs. Client, just like we talked about, if you can please let me get through this, I'm almost done. Rest assured, we're going to have plenty of time to answer your questions. Is that fair? They don't say no, it's not fair. If they say no, it's not fair. Well, sure. Just know that client probably didn't want to do anything. Yeah. So it's very important you set the tone from there. And on the new loan, I walk through everything. Now, here's something a lot of loan officers screw up, especially if in their minds they're telling themselves closing costs are too high. So let me give you an example. Let's just say the client's current loan amount is $200,000 and their new loan amount is going to be $210,000. Here's what loan officers do. Your new loan amount is going to be $210,000. Don't wait. Stop. Don't be silent. Go through everything as confidently as you possibly can, and don't change your tone. Don't have your pitch get up higher or lower based on what you deem to be important or not important when it comes to your consumers. So, Mr. and Mrs. Client, with the new loan, we've done an incredible job bringing your rate down a full percentage point, all the way down to 5.875%. And now with that, the investment for this is going to be right at about $10,000, which is great because it's wrapped into your loan, which brings your loan amount to $210,000. And with that, we're able to bring your monthly payment down that $150 that you were looking for you and your family. And now the interest savings on this equates to X amount of dollars for you and your family. And your recoup time, and now you guys are seeing what I'm doing, right? I'm going back and forth. I'm building it up. But what I'm not doing is saying things like, yeah, the cost could be too. It's not my place to tell a client if the cost is too high. It's my place to let them know things like their recoup time, their investment. You want to tell them everything. You want to be upfront. You want to be honest. You want to be direct. But
and your tone,
go ahead, Tom.
Your tone and volume are the same, but they're not robotic, which I think is another key part.
Yeah, you can't be robotic. It's a big financial decision. Your job is to be the advisor. I'm not going to tell you it's a good or bad idea, especially pending your circumstances. What if they have to do this because they're going to miss a payment and they potentially could lose the house? What if they really need the savings because they lose a job? It's not your place to make the call. It's your place to deliver the news and all the news. I'm not saying skip over something. I'm simply saying deliver the news in a calm, tactful manner and make sure they have all the information. Step 5, from there, what I'm doing is I'm going to recap the benefits. All right. And what this does for you and your family is it gives you that $150 in savings a month. More importantly, it gives you that additional flexibility. And plus, you're going to have the ability to skip a mortgage payment. Now, that payment is wrapped in, the interest is actually going to be wrapped into the payoff of your loan. So yes, they're still collecting the payoff, but it's going to be included in the loan amount, and you don't have to bring that money to close. And then also on your mortgage statement, you saw an escrow balance of about $2,500. We're refilling your escrow account for you with the loan amount that I gave you of $210,000. You'll be receiving a check for that $2,500 roughly 21 to 30 days after your loan closes from your current service provider. So not only are we saving you that $140 to $150 a month, we're helping you skip a mortgage payment, and you're having that escrow money come back to you of roughly $2,500. On top of that, you're saving the money that you need because of the financial hardships that you and your family have come across. Now, with that said, this is the last step, step 6. You transition to close. You do a close. With that said, what I'm going to do is get the documents out to you and your wife in black and white, and we will start signing here together. I just have a few application questions for you. Let me know when you're ready. Now, what that does, let me know when you're ready, is now the door opens for questions, or if there aren't any questions, they just say, great, let's proceed. Majority of the time, they're going to ask questions, but I can't tell you how many times clients said, that sounds great, let's move forward. But you have to give that option. Don't slow down the conversation. So that is today's sales tips. It's a 6-step process to the perfect presentation. Hope that helps.
That was awesome. Loved it. Yeah, very informational, and I think you can apply it today on your next call. You ready for story time?
Oh yeah, that's right. We don't have any of the.
We don't have a new Fuse app because
no, we got it.
I've been slacking, so
we got it. We should do it.
We're already promoting
coming into the new year.
Yeah. We'll have it by January, and until then, you'll have these awkward conversations where John and I realize that we. So enjoy those while they last. And John, the floor is yours.
All right. What story do I want to tell today? You know what, Tommy? I am gonna tell the story of wanting to punch somebody in the face. I think I've told it before on one of our first podcast, but I'm going to go into a little more detail this time around. So this is a true story of the time I wanted to punch a leader of mine in the face when I first started. And there's a lot more context to it. So when I got into the industry, I was a top producer pretty fast. Now, keep in mind, I was a college dropout, helping out around the house with my family, and had a lot of friends that told me I should go to college. I had their parents telling me I should go to college. And I was like, I'm going to prove you wrong. Terrible mindset to have. So I start my journey in retail, and I exploded at about 21 years old. So 6 months into my career, I mean, I'm doing 40 plus loans every single month, and I'm making money. I couldn't believe it. It was amazing. My life was changing. Everything was getting better, and I just couldn't believe the opportunity that was put in front of me. So as I'm writing 40 plus loans a month, people start looking up to you after that point. So they start listening to your phone calls, and they start really putting you on a pedestal. So one of these calls one time, I decide that I'm going to do something that I shouldn't do. And here's what I mean. So back in the day, we used to do something called a good faith deposit. We would collect a deposit up front. Now you can't do that. You have to get the letter intent to proceed. But we would collect the deposit up front. We would ask for a credit card. It was a commitment to do business that would cover your third-party cost. Yes, you guys already know where I used to work, and that was a common thing that we used to do. So as I started getting really good, basically we had tiers that we could hit. And every once in a while, if I felt bad, I would take the risk and cover the deposit for the client. Now, unfortunately, this is what we called a soft sell. This is basically, hey, are you really selling it, or are you just waiving the deposit because you couldn't really sell the product to the consumer? And so I went into this room, shut the door, and it was called the soft sell room, right? They would just joke around. It was any room you walked into and shut the door if you were on the phone with the consumer. So I go in there and I do exactly that. I waive a deposit thinking I'm sweet. I walk out of the room, the floor, basically my leader on the floor had the speakers up, and they were listening to my call, and they start laughing at me. So they're laughing at me, and I'm like, what are you laughing at? And then they talked about what happened. Oh, now I'm frustrated. Now I'm irritated. And my leader pulls me into a room with some of the other leaders, and we start having conversations. And they're poking fun of me this whole time. They all keep poking fun of me. And now, being as hot-headed and cocky as I was livid. 22-year-old John was so angry about this situation. So they're making fun of me, and I'm just staring straight at the wall. They're to my right, and I'm staring straight, turning red, just black eyes, ready for war. I'm ready to start swinging on people. I'm so angry that they would do this to me. Top producer, Jonathon Haddad. What an ego. What a terrible ego. So my leader starts asking questions. I refuse to answer. He asks again. I don't answer. He asks another one. I don't answer. And then he asks me one question. And he says to me, John, do you want to punch me right now? And that one I wanted to answer. So I look over and I said to him, yes, I do want to punch you right now. And he starts laughing. He goes, that's why you're going to be good at this. Now, fortunately for me, he was one heck of a leader that helped guide me. And the message through all of that is, the reality is my ego got in the way. The truth is, the feedback he was giving me was the right feedback. I was soft selling, and my anger and frustration got in the way of me potentially growing. And some of you might say, well, John, isn't that pretty harsh that he was playing your call on the floor in front of 500 loan officers? Not when you're a top producer. No, it's not. These people look up to me. So what kind of example am I setting for them? And so it didn't take long. It's probably a couple months later. I accepted it. I accepted the feedback that I got. And there's a lot of people out there that refuse to accept that feedback, and they go into conversations with their egos incredibly high. See, getting to where you want to go requires you to have the ability to accept feedback and let your ego down. We all have one. We all have one. And there's times where you got to have it take a back seat, or else you're going to be in for a world of hurt. So my challenge to all of you is very simple. When you get feedback from somebody that knows your business, by the way, I don't like unwarranted feedback. If you don't spend time with me, if you don't listen to my phone calls, if you're not around me all day, it's tough for me to accept your feedback when it comes to writing loans, for example. But this is the type of guy, he was listening to my calls daily. He knew the skill I had. He knew the way that I spoke to people. He knew me in and out. And so that feedback is what helped take me to the next level. How many of you have missed an opportunity because you were so angry at the feedback you were given that you took it so personal? This is why when I'm getting attacked or people are coming at me online, I'm just able to handle it and move forward. Because your ego cannot stop you from growing. And if it does, you are going to be in a world of hurt and not be in the position that you want to be years from now. So what are you going to do next time somebody gives you feedback? Are you going to be like me and start to turn red, get angry, and blame that person? Or are you going to start to turn red and then let that subconscious kick in and go, hey, you know what? What is this person actually saying right now? By the way, feedback is feedback. Just because you might want something more of a soft landing doesn't mean that direct feedback isn't good for you. But John, I'm only receptive this way. What does that mean? I'm only receptive this way. No, be receptive in all ways, especially from people that love you. So my challenge to all of you is to grow, let that ego down, and take feedback and move forward. That, my friends, is my story for today.
I love that story. And feedback is so important. So if you have feedback for us, leave it in the comments. But I think you said something that really struck home and that was very important that I wanted to highlight again, which is if you're getting feedback from people that don't know you, just ignore it. If you're getting feedback from people that truly care about you and are the experts of you, listen to it. It comes from a right place. They may not always say it in the correct tone, but it is coming from a good place. So it should at least be listened to and have a discussion around. And I want to thank everyone for tuning into this episode of the Broker Power Up podcast. If you found today's tips helpful, do us a favor. Hit the like button to let us know you enjoyed it, which helps even more people see this content. Subscribe to our YouTube channel. Ring the bell to get notified every time we drop new content. Share this video with a fellow broker who could use a power up. And remember to lead by example, to lift each other up, to grow together, and most importantly, close more loans. Until next time, keep powering up.